Hey guys, it's Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. And this week's lecture comes by popular demand. And I understand we're all going through different things in trading. Some people are having the greatest winning streak of their career. Other people are having the biggest losing streak of their career. So today's topic is how to handle a trading slump, how to handle a losing streak in trading. Guess what? If you're in one right now, you're not alone, because every single trader that has ever traded the markets has been through a losing streak. Yep, you heard me. Every trader. There's no trader that's worth their salt that's been doing this for more than a month or two that hasn't experienced a losing streak. Okay, so today we're going to talk about how losing streaks happen, why losing streaks happen, but more importantly, some of the things you could do to mitigate those losing streaks, how to overcome those losing streaks and not get mentally all tongue-tied and twisted, because I get it. When you're having a tough time in trading, you feel like there's nothing you do that's right. Everything you do is wrong. Everything you touch turns to crap. But guess what? It's just not true. So we're going to talk a little bit about statistical odds, statistical probabilities, tracking your trades, things you can do just to be a better trader, but also to overcome losing streaks and just understand better what it is that you're doing. All right, so it's a very important topic with traders because, again, it's not an if, it's a when it's going to happen. All right, it's a very, 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 very important thing to understand so that you don't emotionally do something very stupid like go on tilt. Okay, so I hope you guys enjoy these lectures. If you do, please click that like button, hammer that subscribe button, guys. You're not going to find this information anywhere else on the internet for free. Trust me on that. All right, I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to handle a trading slump. Oh boy. Hot topic perhaps. For some people it's relevant, especially recently, and other people, they're looking cross-eyed going, I don't know what you're talking about. I am great and I always win. My name is Elon Musk. I'm the smartest man in the last 1,000 years. But the truth of the matter is this, okay? Every single person goes through a slump at some point. I don't care who you are. I don't care how smart you are. I don't care how wealthy you are. I don't care how nice or how mean you are. It happens to everyone. Talk to Michael Jordan, talk to LeBron James, talk to Babe Ruth, talk to Mike Trout, talk to any trader in the world, talk to a hedge fund. Maybe there's some HFTs that don't have slumps. I don't know. But generally speaking, it doesn't matter what you do in life. You come across a point in a time where things just don't click the way they were clicking, or they're not working as well as they used to work, or something, a crossroads, so to speak. In trading, this happens to everybody, whether you're a new trader or an experienced trader, okay? It's everybody, 100%, not 99, 100%, okay? And we have seen it here, whether it's myself or whether it's Unmol or whether it's you guys. It's just a part of being a person. You're going to say, oh, it's a part of being a trader. It's just a part of being a person, right? Whether it's a slump in your marriage, whether it's a slump in your relationship with your kids, whether it's a sporting slump, whether it's an eating unhealthy slump, whether it's a drinking too much slump, whatever it is, we all go through it. And you know what? It's okay. It makes you who you are today. All right, so that's what we're going to talk about today. I will be straight up forward with you. There are not very many chart slides. There are 2. Everything else are text slides, so it's going to be a lot of me talking and you listening because there's not a lot of text slides, because that's not, or chart slides, sorry, because that's not really what this topic is about. All right, but before we do that, let us first talk about when will the insanity stop? When will it stop? You know, each week I do these, and some weeks they're more egregious than others. This is kind of a run-of-the-mill egregiousness. It's not insane. It's just a lack of understanding is really what this particular week's insanity comes down to. Stock market losses, how do y'all cope? I've had a terrible 8 months in the market. From a peak of 340,000 in my account is now down to 88,000 with zero cash to use. Most is in Tesla, which I'm up a decent percentage in, but the other money is in Roku and Fubo, which I am down big on. basically, without dragging this along, this person doesn't understand the difference between trading and investing, right? And a lot of people don't. I'm blown away. I fielded a phone call yesterday from an acquaintance, kind of a friend of my wife's acquaintance, and he's like, "Hey, I got 20, 30 grand. What can you do with that? Can we make 20 or 30% in the next 6 months?" I'm just looking at him like, what are you trying to do? Are you trying to trade that money? Are you trying to invest that money? What's your risk tolerance? Like, what are you trying to do? Well, I don't know. I just want to make money. Well, gee, don't we all? But there's parameters within which we all operate to make that money. How aggressive you want to be, the timeline in which you have your risk tolerance, which is also how aggressive you want to be, right? Do you want dividends from your stocks? I mean, what are you trying to do here? You know what I mean? Is it money you have to have 6 months from now? Is it money that you can hold longer if need be? So it's just one of those things. And you look at this person and you just don't understand what trading and investing is. They are different. Did you take that 340 grand and just YOLO it and expect Tesla to keep doubling? Just like people in 2005 and 2006 in the housing market, they'd buy and then every 3 months their house would be up another 10%, and then 6 months, 20, 30%, and all of a sudden, like, yeah, I think I'll sell, I'll buy another one. It doesn't work like that, right? So how are others dealing with this downturn, feeling really bad? Earlier, I wouldn't think before spending 2 to 3 grand on stuff. Now, I think even before having an $80 dinner, okay? I'm down more than 200 grand, money which would have been of so much use otherwise. Now, here's the problem, guys. If this person had put their money in cash and the market doubled like it did over the last 3 years, right? Between 2019 and 2021, a 3-year period, 19, 20, and 21, the market literally doubled in value. You're up 100%. It was up like 30%, 20%, 30%, give or take. I'm off by a percent or so, right? So what if this person did that and they still had 340 grand when they could have had 680? Even after this pullback, they'd still have 400 or 500 grand more than they started with. Or not more than, but they'd have that in their account. So this person can't win. Do you understand where I'm going with this? This person has no mental concept of what they're doing. So they're never going to be happy unless everything's going up and they're partaking in it. No, you don't spend all your money and YOLO it in one stock. You leave some cash for a rainy day. What's your timeline on this? So this person really needs to reevaluate how they approach the stock market. See, you still have your 340 grand. It's just that the stock is down. Now, is Roku a good investment? No, I think that's a terrible, terrible decision. Tesla, perhaps it might take some time, but it'll probably come back at some point. They make decent cars. It's a decent company, grossly overvalued, but it'll probably come back. The rest of the stuff that's in your portfolio, I don't know. Is it garbage or not? What's your timeline on it? Okay? So the point I'm getting at here is know what you're doing before you do it. Write it down on paper. Don't just have your neighbor go, "Oh yeah, that Tesla's a real good stock. I bought a Tesla last week and it's such a wonderful car." And then you go put 200K into Tesla. That's just stupid, right? Guys, this is the part, and I'll leave it at this. People work very hard for their money, right? Whether it's a 9-to-5 job, whether it's a sales job, whether you're an executive, it doesn't matter what you do. You work hard for your money, most people. And I think we all understand and we all know it's a lot easier to spend it and lose it than it is to earn it. So the question then becomes, why are you so cavalier with spending it? You spend all this damn time, 40, 60, 80 hours every week of your life. That's time away from friends, time away from family, time away from hobbies, making this money. And then you just go throw it like it's shit on the wall. Yeah, I hope it works. That dude said it was cool. My friend's neighbor's brother's uncle said it was a good idea. What? Think about what you're doing with your money. Because your money is akin or equivalent to worker bees. You're the queen bee. You have the money. And your worker bees are each dollar. And you send out those dollar bills, those $100 bills, and you send them out into the world to bring back honey. And that's the money. Okay? You don't just cavalierly do it. No, you overlook it. You manage it. All right? Stop. Stop being so cavalier with your money. So when you go next time to this person, if you're listening, to invest in Tesla or Roku or Fubo or whatever, really do some homework, right? Do some homework. Really give it some thought. Is this a good investment? What's my timeline? What's my risk tolerance? Do I need this money a year from now? Because clearly this person does. Their $300,000 portfolios down to 88 grand, and they don't even want to have it, spend $2,000. So clearly this was money that mattered to them, right? So anyway, guys, let's move on. I spent longer than I wanted to on this topic, but it's an important topic, all right? And by the way, to this person, if you're watching, remember we saw this one a week or two ago? Remember we saw this? The Dow was at 64 in 1921. It peaked at 36,799. This too shall pass. I don't know about Roku because it's probably a really crappy investment. But my point simply is, given a long enough timeline, most companies come back. Unless your name is WorldCom or General Electric, because you're done too, General Electric. All right? This is why, for those of you looking at long-term investing, just buy a total market fund, man. Don't try to be a hero. Get your 10.68%. Yep, that is the lifetime return of the SPY, the S&P 500. 10.68%. Holy shit. 10.68%. That's pretty damn good. That's if you reinvest the dividends. Forget about these other companies. Just invest in that. Then you'll sleep well at night. You ain't going to get rich quick, but you'll wake up 10 years from now and your $340K will be close to probably $1 million. I'm not kidding. It will be close to $1 million 10 years from now. And another 10 years after that, $2 or $3 million bucks. Okay? Be smart. All right. So, trading slump facts. Everyone will go through a trading slump, period. Some last longer than others, but no trade is perfect. No trader is perfect. Okay? Experienced or novice, you will go through one, or two, or 10, or 50. Trust me, it'll be more than once in your life, okay? Statistical probability guarantees that at some point you will have a slump. Okay? These are facts. It just is what it is. Now, why am I saying this? Because when you're flying high and riding high, you don't ever think about a slump happening. It's the furthest thing from your mind. You think, oh, well, a little bit of a reversion to the mean is probably acceptable and appropriate. Like, yeah, I just won 8 out of 10 trades, so maybe I'll only win 4 out of 10 trades on my next 10. That's still 12 out of 20, though. That's 60%. It's probably higher than you normally get. People just don't appreciate, respect, and understand just how common or frequent statistically a slump is. It's shocking. We're going to talk about it a little bit later on. I'm not going to get ahead of myself. It is shocking for those of you that do statistics and numbers how frequent statistically a slump is possible. It's amazing, actually. So then the question becomes, okay, how do you handle this inevitability, right? Accept it. It's going to happen. Accept it. How do you handle this inevitability? The first thing you have to do, by the way, before we move on to talking about it is come to grips with the fact it's a certainty. It's not a likelihood. It's a certainty. You have to come to grip. Now, the problem with this is you say, yeah, I get it. But until you're actually in the slump, you don't get it. You get what I'm saying? The mental stress and frustration of it, you don't get it till you're actually in it. You can talk about knowing what it's like to be in a slump, but until you actually experience it, where everything you touch turns to shit, you're tongue-tied and twisted, pretzel-tied. Like everything you do is just wrong, despite your best efforts. Only then will you fully appreciate it. Okay? Well, what is that quote there, Sophia? It's tough to continue to fail and keep up the enthusiasm. What is it? The definition of success is being able to go from failure to failure and continue to keep your enthusiasm. Something like that. I can't remember the quote, but somebody will bring it up and put it up there at some point. Okay? So, we have all experienced this. Hey, nice 3-bar play. Peekaboo, stop. Peekaboo, stop. Hey, nice 3-bar play. Peekaboo, stop, rip. Hey, nice 3-bar play. Peekaboo, stop, drop. We have been here, okay? I have, and the reason I know I have is because I took all three of these trades. Run, PayPal, and JD. All right, I took all of these trades. All right, and this was a little while back. This was in August, a couple months ago. Okay, now, when you look at these patterns, there's really nothing inherently wrong with them. Now, you could make an argument that maybe Run was, up a little bit, but it was only up, I don't know, $3, $2, $3 gap, which is not terrible. My point is, generally speaking, people would look at those and go, hey, those are appropriate looking 3 and 4 bar plays. If you took the 84% play, 2 of the 3 worked, right? But not everyone does the 84% play. The point simply, though, is this will happen to you, and sometimes they're annoyances, right? Sometimes they'll just peekaboo you in and peekaboo you out and then rip. And you've heard me say this, but it's been a while since I've said it, okay? How things happen matters, but it shouldn't, right? How things happen matters, but it shouldn't, okay? And it really shouldn't. It really shouldn't matter how things happen. They just happen. But it does to us because we're psychological creatures. We all have emotions, and these emotions sometimes get the best of us. A prime example of this was it NVIDIA yesterday, guys? I can't remember it. Was the 84% play I didn't take yesterday, the one I didn't take, and it worked. I was so tired of just getting floundered and flopped around, right? Grinding up a little, grinding down a little, grinding up a little. It didn't look that good, and then sure as shit, the 84% play retriggers, and it works. Because how things happen matters, but it shouldn't. And it did to me yesterday. So I'm telling you, as an experienced trader, 17, 18 years of doing this, it still gets to me sometimes too. All right? So we've all been here. We've all had that emotional roller coaster, and it's not fun, right? There's nothing fun about it. All right? So the noticeable, obvious things to do. These are the duh, even a brand new trader knows these things. Review your trades to see if you made any noticeable mistakes. Duh. Did you follow your plan? Did you do anything stupid? Fat finger the keyboard, take double the risk by accident, maybe you shorted something but you're supposed to go long, like just silly stuff, okay? Did you get caught on the wrong side of the market? Somebody asked me about Ford Motor Company today, and I said, you know what? It's a decent trade, but look at the market. The market turned and rolled over 2-3 minutes after you got into the trade. And otherwise, the trade probably would have worked, but the market got hammered. So Ford dropped and stopped you out. So when you look at that, that's an obvious, noticeable issue. Is it a mistake? Not necessarily, because what? That was unexpected. It wasn't necessarily news, but there was something unexpected that you couldn't reasonably account for that happened, right? So these are the obvious things. Duh, if you're not doing these things, you shouldn't even be a trader, okay? So we're going to have to look beyond these things because these are the obvious things, all right? What does your trading buddy or accountability partner have to say? Have them look at your trades. What do they say about them, okay? Has this happened to you before? And this is a big question. Are these slumps frequent, like as in statistically too common, right? They happen too often. They shouldn't statistically happen. So if that's happening to you, you need to start digging a little deeper. And then ask yourself, is it some combination of these things as well, right? But these are the things that immediately come to mind. And I may have missed one or two. But these 6 things or questions, I immediately ask myself, well, 1, did I follow my plan? Did I do anything really stupid? Okay? Did I get caught on the wrong side of the market, right? And was it somewhat unexpected? Did a news report come out? For example, maybe 10:30 natural gas comes out. I'm in ExxonMobil, and all of a sudden it tanks. Well, that's under, did I do anything stupid? The stupid part of that is I didn't check the news report. Duh. I should have done that. That wasn't unexpected news. That was just expected news that I didn't check. Unexpected news is Elon Musk buys Twitter, and Twitter pops $15. That's unexpected news that you could not account for or have known. Shit happens sometimes. It shouldn't happen that often, but it will happen sometimes. Okay? If your edge appears, you have to take it no matter what. You can't look at the winner or loser on that trade. But as a string of trades, yes, Fire Captain, we are going to get to that point in just a moment. You're getting ahead of me, but well done, right? The point is, look at these 6 things first. Have somebody check it out, okay? But if nothing comes to mind, then what? If nothing comes to mind, what do we do? So let's give you a scenario. You lost 6 trades in a row over 3 days. What do you do on the 4th day? Use a lower risk, maybe half lots. Take the day off. Double your risks to get your money back. Limit yourself to only 1 trade. Do nothing different. And while you're thinking about these 5 answers, and if you can think of a 6th or 7th answer, that's fine. While you're thinking about it, ask yourself this: does the answer change for novice versus professional traders? Interesting. Now remember, this is after you have already done the previous slide. The previous slide says check the basics. Check your trades. Were they good? Check your plan. Did you follow it? Check the news reports. Did anything unexpected happen? This is after you've done that. You've done that already. Now what? Remember, we're on this slide because we couldn't find anything unusual on the previous slide. Right? Nothing stuck out to us. You look at it and go, I didn't do anything stupid. I traded with the market. I look like I took good trades. I just can't find anything. Okay? So what do you guys think? Use a lower risk, maybe half lots? Take the day off. We'll call it 1, 2, 3, 4, 5. What do you guys say the answer is? We'll call it 1, 2, 3, 4, 5. Put a number in. Talk to me. Take the day off. Double your risk. Limit yourself to 1 trade. Do nothing different. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Talk to me. Give me an answer. Daryl's like 1 through 4. It's hard to take lower risk if you're taking the day off. Oh, you're killing me. All right, so the general consensus is 1s and 5s. It seems that way. There are other answers pitter-pattered in there. Jerry has a 4, and let's see, Chris has a 4, Dennis has a 2, etc., and so forth. Okay. He said 1 through 4, and the answer is 5. So 1s and 5s. Either use a lower risk or do nothing different. Again, there are other answers, but the general consensus is 1s and 5s. It looks like 5s won out, but 1s aren't too far behind. Okay? Here's the answer. Here it is. Do nothing. Which means it's number 5. Okay? Do nothing. Nothing different. Do nothing different. Do nothing. Okay? Do nothing. It's 3 trading days. It's 6 trades. You've already looked, and there's nothing obvious or egregious that you're doing wrong. Why would you change something? I mean, this isn't 3 months. This isn't 300 trades. 6 trades over 3 days. Why would you change something? Again, to repeat myself for the 5th time, you've already looked at your trades. You've already looked to see if you did something stupid. You've already checked with your trading buddy. You've already seen if you followed your plan or not. Okay? Why in the world would you cut your risk in half? You know what happens when you do that. You win everything the next day. You go 3 for 3. Right? You get 3 winning trades. You make, instead of 2R, 1R, you make 3R instead of 6R. All of a sudden, you would have been back at break even, but you're still down 3R. Okay? Guys, the odds of loss in trading are high. Even with a 50% batting average. Your odds of a losing streak are pretty high. Yep, exactly right. The worst thing you can do is significantly change your process. If you win on reduced risk, you aren't helping yourself. then go back to losing again when you raise your risk back. You're chasing your tail. And this is what people do in losing streaks, right? Think about it. Reduce the risk, then you win, and you're like, okay, well, I'm back to normal. I'm going to raise my risk back up. Boom, the losing streak strikes again, and you're like, oh, you've got to be kidding me. It's like they're sitting on my shoulder, like watching me, right? If you limit yourself to one trade, perhaps it's a very giving trading day the next day. Maybe you would have won 3, but you only took 1. If you double your risk, you could dig a deeper hole, right? Taking the day off could work. Maybe you do need it. Maybe, right? Maybe you're so like mentally drained and exhausted. That could be a potential answer, but you might be missing out on the one day of the month that the trades go 10R, right? Think about it. So thoughts. Your risk should be small enough that none of these slumps have a major impact on your account. This is why we have money management rules with regard to how much you're risking. I tell you guys, no more than 1% ever. And that's for super experienced traders. 0.25%, 0.5%. And when you're new, $5, $10. It shouldn't matter. 6 losing trades in a low at $10 is $60. If that's enough to make you rethink your trading career, then you started undercapitalized, or you probably shouldn't be doing this anyway. Okay? Thoughts. Batting average and win-loss ratio have a huge impact on the prevalence or frequency or likelihood of these slumps. Guys, there's a difference, man, between doing 1R all or nothing and 5R all or nothing. I mean, a 6-trade slump at 5R all or nothing is like something that's going to happen every week to you. Seriously. It's going to happen every week. 1R all or nothing, well, your batting average should be in that 65% range. So these slumps are less prevalent. We'll get to all this in just a second. Okay? We'll get to all this in a second. Have you ever given it any thought as to the likelihood of an extended losing streak given your style of trading? Right? You ever thought about it? Do you even know what that expectancy is? Do you know what we're going to talk about it, so don't worry. Whether you're a 1R trader or a 3R trader, whether you raise your stop versus doing all or nothing versus managing on pivots. Now, obviously, if you're brand new, you don't have a lot of data to track this. But if you've been trading 6 months or a year or 2 years, you have a lot of data. You can go back and say, well, historically, my batting average is 51.3%. My win-loss ratio is 1.62. Okay, let's take a look. Right? What does that come out to? You need to know these things. It's like talking to Daniel Negreanu. Hey man, if you have pocket aces and a 3 and this is on the board, what's the likelihood? What are the odds? You ever see that when you watch World Series of Poker? The odds of somebody winning a hand? Those guys are calculating it in their head. You should have at least a basic understanding of how prevalent a losing streak actually is. Okay? 2, so let's talk about probabilities. Let's take Mike Trout. For those of you that watch baseball, I am not a huge baseball fan. However, Mike Trout's a hell of a player. Most people have heard of him. So, you go, this is the link to find this, okay? So this is Mike Trout. His career batting average is .303. This is for his career, okay? He hits safely in 71% of his games. Okay? So, this is how many times he has played a game and only had one at-bat. AB stands for at-bat. Only 1% of the games that he plays in does he only have one at-bat. Why? Because if he only has one at-bat, he probably got hurt, right? Something happened, he probably had to leave the game. Most games, if you watch baseball, you're going to have 3 to 4 at-bats. And you'll see, the vast majority of games he plays, he has 3 at-bats or 4 at-bats, right? 30% of the games he's played, he's got 3 at-bats. 45% of the games he's played, he has 4 at-bats. 13%, 5 at-bats, okay? Apparently it's happened. He's had an 8 at-bat game before. It's rare. It's extremely rare. But he's had it before. Same with 7, okay? Now, Aaron Judge is the guy you're talking about. But the point I'm getting at is 75% of the time, Mike Trout gets 3 to 4 at-bats, okay? What's the point here? The more at-bats he gets during a game, his hit probability goes up. right? If he only has one at bat in the game, there's only a 30% chance he's going to get a hit that game. Okay? If he has 5 at bats, there's an 83% chance that he's going to get a hit during that game. If he has 5 at bats, there's an 83% chance. Point is the more opportunities he gets, the higher the likelihood he gets a hit. Okay? But the point here is, yes, trading is that way too. If you took one trade versus 10 trades, there's a pretty good chance that if you took 10 trades in a day, at least one of them is going to work. Right? But that doesn't necessarily mean it's what you should be doing. It just means the more trades you take, the likelihood of getting one to work is higher. But it also increases the likelihood of a losing streak. Right? So, let's talk about it. Beating DiMaggio's 56-game hit streak. Nearly impossible. Really. I mean, it really is. It's one of those freakish things that probably should never have happened. But if we use Mike Trout's formula of batting .303, getting on base, or 71% of the games that he plays in, he has a .0000025% chance that he will ever record a 56-game hitting streak in a 162-game season. That's 1 in 3.9 million. Now, real quick, okay, I'm going to veer off topic briefly. Your odds of winning the lottery are like 1 in 170 million? Your odds of winning the lottery are like 50 times lower than Mike Trout getting a 56-game hitting streak. Okay, think about that. And we all understand that his chance of getting a 56-game hitting streak is basically is nil. Yes, it's 1 in 3.9 million, which is pretty damn rare. Okay? Point I'm making here is understand the odds. How many trades a day do you take? 1, 2, 3, 10? What's your management approach? 1R, 2R, 3R? Do you follow your plan or do you break your plan? Because again, breaking your plan is going to put a hitch into these statistics. Okay? It's going to put a hitch in these statistics. What other factors might affect your losing streak? Seriously, there are external factors. You might be really sick and you shouldn't have woken up that day. Maybe you woke up late that day and didn't do your pre-market routine that day, right? Maybe you only go long. Maybe you're in an IRA or a 401k, or maybe it's only a cash account and you can't short. And then we're having a pullback in the market like the last 6 months, 9 months. There are other external influences and factors. But considering all of those things, put them into a bucket, the odds are still fairly consistent. So, if you have a 50% batting average, then statistically you will have 4 heads in a row at least once every 16 attempts, right? 3 in a row once every 8 attempts. Statistically speaking. So that assumes a 50% batting average, and I know that that's considering it's a fair coin, right? And traders aren't always fair to themselves because we like to mess around with things. And right, assuming that coin is an honest coin, you may not be an honest trader. So these statistics could be more for you or more against you. Obviously, there's more to trading than that, but it does show the high likelihood of a losing streak with only a relatively small number of trades. The lesson, don't overreact. The odds are the odds, but here's the thing. We're not a coin. A coin is a piece of metal. It doesn't care whether it's heads or tails. It has no feelings. You do. And those feelings oftentimes impact how you see things, how you view things. And then you start changing things. The coin is flipped the same way. It weighs the same. It hits the table, blah, blah, blah. You're not. You're different. So the question you need to be asking yourself all the time is, am I doing what I am supposed to be doing when I'm supposed to be doing it? This is where you have your pre-trade checklist, your must-haves, your like-to-haves. Are you following it, or are you throwing a wrench into your odds by doing something perhaps you shouldn't be doing? Changing the odds. Make sense? And I think for a lot of traders, they do. They're so they're so inconsistently consistent. The only thing they're consistent at is being inconsistent. So the goal here is to fine-tune your trading and take out as many external variables as possible. Eliminate those subjective variables, if that makes sense, by being as robotic as possible. You will earn the right to have subjectivity eventually, just not now, okay? So of course you might be doing something wrong, which is why it's always good to have your trade reviews, but losing streaks can be very common depending on your approach, particularly your target goals. Some of you are shooting for 5R, some of you are shooting for 1R. Well, different market environments, as we've seen recently, react differently to those styles of management, okay? So here's another example. Winning and losing streaks, okay? Hit rate, right? How many times you're going to win, your hit rate. Max likely losing streak over the, say, we'll call it 50 trades, right? Even though this is 50 hands of blackjack or whatever it is, okay? If you have a 50% batting average, max likely losing streak is 6 over 50 trades, right? Max likely winning streak is 6. These are pretty high odds, right? Likely losing streak and winning streak. Over 500 trades, if you take 500 trades, say that's, 10 months worth of trading, the odds that you get a 9-trade losing streak are very, very high, okay? Very, very high. 1,000 trades, for those of you who take more, note the difference, though, between 500 and 1,000. It's not a huge difference, 9 to 10 trade. But the point, though, is if you're between 40 and 50%, say it's 45%, over the year, there's a good chance you're going to have a 10, 11 trade losing streak. Very good chance. Like almost a certainty. And we're freaking out over it. We're freaking out over it. This is where you need to step back and understand that the odds of this happening to you are high because most traders are not having a 70, 80, or 90% batting average. Okay? But even if we go to 70%, which is very high, over the course of a year where you take 500 plus trades, the odds of you having a 5-trade losing streak are very, very high. So the first thing to do after you do the obvious and check to see if you've made an egregious mistake is to go back and understand and check yourself and go, this is normal. Now the next question is, am I above the statistical probabilities? Am I frequently having 12-trade losing streaks, 10-trade losing streaks? Is this happening to me every month? Because statistically it shouldn't. Again, depending on your general batting average. That might be a concern because now you're outside of the statistical realm of probability. So these are things you need to continue to ask yourselves, all right? Because we have to go back to the crux. We've already done the obvious. We've already looked at our trades. We've already looked at news reports. We've already looked at the market. We've already looked to see if we did anything stupid. We've already pushed that aside because those are the obvious things. That's what any normal business owner would do. You look at the obvious things. Hey, we didn't sell any hamburgers today. Well, the first thing I'm going to do is look outside. Is it raining? Is it snowing? Is there ice on the roads? That's the first thing I would do. No one came in because the roads are empty because, well, it's too dangerous to drive today. Well, maybe it's a holiday, everybody's at home. You look at the obvious stuff first. But here's the problem. Most of you aren't even doing that. The vast majority of you are not even tracking your trades. And some of you are doing it so nonchalantly, it's like, I took 3 trades yesterday and I won 1 and I lost 2. That's it. That's all you do. You don't even know what trade you took, the time of the day you took it, how many shares you took, nothing. What day of the week you're good at, what time frame you're best at, what pattern you're best at, why. I want to leave you with this, guys. I don't know of a successful business or sports team, whether you take the NFL, whether you take NASCAR, whether you take Apple, Microsoft, Facebook, I don't care. I'm going to use a line from Gordon Gekko. The most valuable commodity I know of, buddy, is information. Think about that. The most valuable commodity I know of is information. Why do companies track everything you do? They want more information on you. Why? Why do they want more information? Because more information, when used properly, allows them to understand your purchasing habits much clearer. Where you are, how you spend, where you spend, when you spend, how much you spend. Your phone is listening to you right now. Go surf the internet for washers and dryers. The side of your email box will be pitching you washers and dryers. You'll go to another website that has nothing to do with washers and dryers, and there'll be advertisements for washers and freaking dryers on it. Why? Because information is the most valuable commodity they know of. And you're not tracking your trades properly. You're not using enough information to really get to the heart of the matter. And the heart of the matter is why you're good someplace, why you're not good in another place, and what you can do to fix it. Guys, that's all we can rely on is information. And without it, I wouldn't know that the 84% play works the way it does or doesn't work the way it does. I wouldn't know if a 2-minute 3-bar play at 9:45 is better than one at 10:10. You don't find that information valuable? You might go back and look that from 9:30 to 9:45, your batting average is 22%. But from 9:45 to 10:30, it's 68%. Over 500 trades, that's meaningful information. And you don't even know it exists. Because you don't treat this like a business. You treat it like a hobby, a passing thing, and you're mostly just a bunch of gamblers because of the lack of information that you possess. I really want you to think about what I'm saying to you guys. Don't brush it off. Tell me a major corporation in this world or sports team that doesn't have an entire department of people tracking every damn thing you do. Big Brother's overlooking you all the time. Why do you think the government wants a digital currency? They want to know everywhere you spend your money. Why? So they have more information on you so that you can't evade them for taxes. It helps them do their job better. Make sure you're not breaking the system, the rules. Why does Apple want to know more about you? Why does Facebook want to know more? Why does Amazon? Why does Google? Why do basketball teams want to know if LeBron James shoots 42% going to his left versus 53% going to his right? Does he shoot better from 8 feet out or 12 feet out? Is he better at 3-pointers, 2-pointers, drive into the lane? What's he do? Why would you want to know those things? So you can better understand your customer. They'll give you the line so we can better serve our customers. No, so they can make more money from you, which to them is better serving them, right? But you understand where I'm going with all of this. Analytics is everywhere. It's everything and it's everywhere. For those of you, again, I like cars. You get a track coach. You go down to the track. You get track telemetry. You come back into the pits. What's the first thing you do? You review the track telemetry. What's the first thing they go over? Look at your braking points. Look at your entry and your exit points. Why? Because I want to see where I'm losing time. And then they'll give you your best expected lap if you improve on those braking points and times. So now you have a benchmark to try to meet. That's information you didn't possess while you're on the track. It's information you possessed when you came into the pits. And now you know, hey, I'm braking 10 feet too early. The apex on that corner, I'm missing it by 5 feet. It's affecting the exit and my traction and when I can get back on the throttle. It's everywhere. And yet you guys don't do it. So this goes all the way full circle back to your losing streaks. If I'm looking at this, and this is happening to me, this is a hypothetical, purely hypothetical. If I'm looking at this, and these are all 2-minute charts, And I'm looking at these and I'm going, wow, nice pattern, nice pattern, nice pattern. And that's my conclusion with all the analytics, okay? But after doing all the analytics, I come to the recognition, hypothetically, that over the last 500 2-minute 3-bar plays before 940, because all of these are before 940, that my batting average is 24%, but the re-entry is 84%. I'm going to stop taking the first trade and I'm just going to re-enter the second trade, or I'm just not going to take 2-bar, 3-bar plays before 930 on a 2-minute chart, before 940. Do you see how useful that information is? Do you see how valuable that becomes? Now you actually know. You're not surmising, you're not guessing, you're not thinking. It goes from subjective to objective. So now my losing streak, theoretically, should be somewhat mitigated. I'll still have losing streaks. But if I see over 500 trades, over 500 2-minute 3-bar plays that happened before 945, that for some reason my batting average is crap, I'm not going to take that. And I notice, for example, maybe 5-minute 3-bar plays after 10 o'clock bat 62%. Take out the 2 minutes before 9:45. Focus on the 5 minutes after 10 o'clock. This is going to help me mitigate my losing streak. So at the end of the day, there's 2 things you should have taken from this. You should have learned that losing streaks happen to everybody. And as long as it's not egregious 20 trades, 30 trades, keep doing what you've done if you've checked your trades and they look normal. And the second thing you should have learned is that tracking your trades will help mitigate some of these losing streaks. Track everything, all of it. Okay? But here's the good news. I do have a refreshed version of the tracking spreadsheet coming out soon. It's almost done. I'm in my beta testing phase, meaning it's done. I'm just trying to break it now. I'm trying to break it. Okay? It's slick. It's a refresh of the last one, but it's nicer, it's cooler, it's neater, and there are no issues with the functionality. I've scrubbed the whole thing. Everything works. Now I'm just trying to break it. My point is, it will give you that data. How good are you on 1-minute 3-bar plays at 10:30 on a Tuesday? You'll have that data. How good are you on longs versus shorts? You'll have that data. What's the best month of the year for you? Now, granted, you need many years to sort that out, right? What's the best time of the day for you? What's the best time frame that you trade on? 1 minute, 60 minute, monthlies, 5 minutes? What's the best pattern that you trade? All of these things put together will help you become a better trader. See, here's the problem. Guaranteed this happened. When you first saw the title, and the title says, how to handle slumps, how to handle trading slumps, how to overcome losing streaks, you probably thought that Jared was going to come in and say 2 or 3 sentences, and a light bulb would happen, money would fall from the heavens, and your losing streaks would be over. No. This is not how it works. You will have another losing streak. You will have another winning streak and another losing streak and another winning streak and so on and so on and so forth. This is to help you mitigate those losing streaks, to help you not freak out when they do occur, and to really dig deeper to find out what the genuine, honest likelihood of it happening is, so that you don't freak out and go, this is just kind of part of winning, so that you can become a better trader. All right? There is no holy grail. There is no singular thing someone can tell you to make you a great trader overnight. There are baby steps that turn into larger steps, and those larger steps turn into strides, and those strides turn into leaps, and those leaps turn into significant progress in your trading. But it starts, what's that Chinese proverb? Every journey starts with a single step, or the journey of 1,000 miles begins with a single step. Every step, even the backward steps, get you closer to your goal of being better. Ask yourself this: what did I do today to make myself better tomorrow? At the end of every day, it's the only question that matters. What have I done today that will help me be a better version of myself tomorrow. And if you say nothing, you've failed today. If you say I did this and this, you've succeeded today. That's it. That's all you can do. You're not a robot, man. You don't just plug a drive into your head and all of a sudden you're brilliant. We're people. We build on things. With that, I hope you guys learned a little bit about how to overcome losing streaks, potentially how to mitigate some of those losing streaks by tracking your trades better, and not freaking out when they do happen, and genuinely understanding the prevalence and likelihood of them happening because it's pretty high. All right? I'm Jared Wesley of Live Traders. We'll get back at it again next week.